Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today we will continue to track the euro currency. Well, yesterday we discussed the three major possibilities for the nearest term development of the situation on this currency. So one of them has been cancelled. As you remember, yesterday when we talked about the nearest perspective of the euro currency, I said that possibly market could create here the stop grabber pattern when the market shift trend to bullish and then close below the red line. Red line is a MACD predictor. Okay, then the taking out of the previous lows will have the solid probability. But here you can see that market hasn't confirmed that pattern. So although it was yesterday below this red line, at the end of the trading session market has closed above it. So this is not the stop grabber, because market just shift trend to the bullish side. Well, here by the way you can see that how important to wait for the confirmation of some pattern before to make some action due to this pattern. So this our scenario has been cancelled. Well, hence possibly we can expect the move to the upside. Why? Because take a look at this area. You can see that market shift trend to the bearish, but price action hasn't confirmed that. Doesn't confirm that. Okay, so you can see 3 consecutive days market has shown the closing to the upside, and finally it shift trend to the bullish again. Also during the 3 previous days market just stands below these highs. Also take a look at this. From this thrust up, just 3.8 retracement, 3.8 fib support from this swing. From this thrust up, also just 3.8 support. Okay, this is very shallow retracement during the up thrust moves. This makes me think that possibly the bullish context, long-term context that we have discussed in the weekly research based on the weekly and monthly time frames could continue. The nearest target of this possible move to the upside, as we said, is 141. Why? This is the target of this possible 3-drive sale, the first drive, second drive and third drive. After this market can turn to some retracement to the downside. Also this is 618 expansion from this ABC pattern. Okay, this will be the nearest target of this possible move to the upside, 141.06. The intermediate target is right here. This could be just some kind of resistance because it is 140.31, this weekly pivot resistance 1. But the fact that it stands just above these highs when placed a lot of stop losses orders to the people who entered on the short side of the market, when the market will trigger it, I think that due to momentum of the execution of these orders, the market can easily pass through this area. Okay, so I do not think that's really strong resistance right here. So currently I do not see any bearish buys on the daily time frame. Maybe you can see some divergence, MACD divergence in this area, but the MACD divergence is not a very reliable signal for me. So I think that market just stands in this area. It shows some bullish dynamic pressure. The trend was bearish, market stands above it. Also market couldn't be able to pass below the weekly pivot point yesterday. Okay, so it has tried to do that but failed and returns back. It makes me think that market is stronger than it seems. And I think that I will closely look to the possible entry on the short side if only market will not confirm this dynamic pressure and continue move to the downside, move below the weekly pivot point. In this case maybe I will think about the entering on the short side. So if you are bearish, I think that for you it's better to stay flat. If you are bullish, you should find for some possibilities to enter on the long side. And here how this could be done. Take a look at this hourly chart. Also you can see that market has hit the target that we have discussed yesterday, 138.36. This was the 618 support from this swing to the upside. I said that CO will be the nearest target of the possible move to the downside. You can see that market has tried to move below the weekly pivot point but couldn't move below it and returns back above it. So this is the sign of strength. Now, although trend is bearish on the hourly chart, you can see that market just stands in this range. Anyway, the hourly trend is not very important currently. Let's discuss the possible areas of support and the further upside targets. You can see this pattern A, B, C bottom. Market hits 618 target and turns to the retracement. This could be maybe a shallow A, B, C, D pattern, okay, that could lead for some agreement with this area, okay. But personally, I like this area for the possible entry on the long side, because this is hourly confidence support area and the area of hourly oversold. When the market will reach it, it will be very unstable, and if market is really strong, it should not break this area. This is 138.97, 138.98. This is roughly 139 area. Okay, this is also the weekly pivot point area. So I think that's really really strong area of support, and we should track the price behavior in this area. If you will see some bullish patterns on this area on the lower time frames, on the 15-minute chart, on the 5-minute chart, so possibly we can try to enter on the long side of the market with the stops somewhere below this area. Okay. But be aware of the possible wash and rinse in this area, because this is strong support. Market makers also see it, and there's very high probability that market maker could try to pierce it for grabbing the stops that have been placed just below this area. The target of this possible move is 100% expansion from this ABC pattern, ABCD, 140.79. It's very close to the hourly daily target. In general, I see that market more bullish rather than bearish. So that's my trading plan for today. I will track this area for the possible buy signals on the lower time frames. Also track for the possible retracement, some shallow ABCD pattern that could give us an agreement with this area. But be sure that market just not falling like a stone. If market will show some huge black candles down, of course you should not enter on the long side. This move to the downside should be gradual. Okay. If it will happen, then possibly it's not a bad idea to enter on the long side from this area with the target 140.80, 141.06 area, daily target with the stops. Aggressive stop just below this area, conservative stop just below this low. Okay, so market should not take the low of this target, no, should not break to the downside 618 support from this whole swing. Okay, that's my trading plan. Good luck to you and be careful.